We're live. Okay. What up, guys, and welcome back.
Lame. Be honest.
What up, guys? Boom. I'm just not even gonna say what up, guys. Okay, starting over right here. As you guys know, we've been very bullish on the RWA narrative for an extended period of time, and that bullishness continues because there are just projects that they've been around for some time, and now they're finally crossing the chasm in terms of getting their product launched, getting it out there to the market. And one example of that is CHEX by Chintai. Do you want to interject and do your, so that's what we're going to do. We're going to go through all this. You do that good. So you do that right after I say Chintai.
So that's what we're going to do. We're going to go through all this.
Real though, like I've never done that in these videos. You always do them, so it's just like, you know, fuck, just keep it going.
So guys, this Chintai platform is really dope. It's powered by the CHEX token and is designed to facilitate tokenization of assets. You guys know we love tokenization, and they provide tools for seamless issuance, management, and trading. And it's particularly focused on the institutional clients with an emphasis on compliance, efficiency, and scalability in capital markets. So in this video, guys, per usual, we're going to give you guys a full fundamental deep dive. We're going to go through the project. We're going to go through the white paper. We're going to go through the tokenomics. And at the end, if you guys stick around, we're going to talk about if we're buying it right now or not and why.
Yeah.
It's kind of weird doing these not in the same place anymore.
Yeah. I guess I'll start us off, and I know you're about to read and you're about to say every fucking thing, so I'm going to say what I'm going to say first. Guys, you might notice that we're not in the same place. I'm in San Diego, visiting some friends. I love San Diego, man. I might just start this thing where I do a split living situation.
No one gives a fuck.
Anyway, let's jump right into it, man. Chintai, a firm out of Singapore, like you said, they're focused on tokenization, and they have an emphasis on regulatory compliance. And to be clear, this is not the regulatory framework of the US. It's the Singaporean regulatory framework. So they are compliant in Singapore, not the US, just to throw that clarity out there. But the hopes are eventually to be compliant with the US regulatory framework as well. And so their ability to tokenize securities makes them particularly attractive to investors around the world. It's weird because, you know, I hate to separate it like this, right? But you look at, you know, different projects around the world, and you have like Asian counterparts to those projects. You know what I'm trying to say?
Asian?
Yeah, Asian counterparts to those projects, like the Neo blockchain. I haven't heard of the Neo blockchain in years, but you know how they were supposed to be like the new Ethereum. There are a few more examples that I can't think of off the top of my head, but that's kind of how I view
Ethereum. Say no.
Oh my god. So that's kind of like, it gives me that vibe, right? Like it's a Singaporean firm. I do see, you know, potential for CHEX to cross over into the US regulatory framework, but it just seems like more of like a geographical derivative, you know. It seems like one of those plays. So like how you would play a Neo. Not saying that CHEX won't be around, but it just seems like one of those plays to me. What do you think?
I think it's very early to tell. I mean, obviously they're going to want to tokenize US assets because everyone wants to own assets in the US because it's the US. And I think they're focused on being regulatorily compliant. So yeah, we'll just have to see. But I think they're doing all the right things to increase their chances. And, you know, they're a competitive sprinter in this race we call tokenization.
For sure.
All right, y'all, let's jump into this white paper and let's dive through this.
And I'm about to dive in.
Whoa!
So it says here, Chintai has deployed a high-performance permission blockchain network that provides institutional-grade digital asset solutions. Chintai offers comprehensive digital asset services for primary issuance, secondary markets, and asset management. Chintai launched the first ever fully on-chain decentralized order book exchange in 2018 of September. The platform has since been developed to provide a comprehensive digital asset solution for enterprise, entailing dynamic forms of issuance and secondary market deployments, all whilst ensuring regulatory compliance.
So guys, I think it's pretty cool that they started off as an order book exchange, because you have some tokenization platforms that doesn't have an exchange component. So it's one thing to tokenize, but then it's another thing to be able to have an exchange where you can trade back and forth, and then to add on top of it being compliant where you're exchanging. That's really, really good. Like I remember we did a video on Securitize, and they'll help you like tokenize things, but they don't have an exchange component. It's really different.
Yeah, and so basically CHEX they've been laying the foundation to get to this point, since their inception, which is great. And it just adds a little more staying power.
A lot more staying power, I'd say. Okay, so this is like a little map showing like their compliance and everything, and like their checks and balances, so to speak. So you have the issuance. This is like basically tokenizing it and issuing it to be traded. This is another key thing, secondary market. So they have it to where, like, when you trade something on a secondary market, a lot of times the person who issues it doesn't profit, right? Like, for example, people line up to buy Jordans, and once they resell them for a higher price, Michael Jordan doesn't make anything off of that. And that's the cool thing about NFTs. They have it all baked into their platform.
A benefit of that secondary market for CHEX is a limit on volatility as well that CHEX experiences, although it's cryptocurrency, so it's going to be volatile. But having a lot of those transactions being offloaded to a secondary market, it basically limits the volatility that otherwise CHEX would experience.
And then they help you manage your cap table with the automated dividend payments and like action. So who owns what part? Because these couldn't be fractional. And they basically just help you automate everything so you don't have to do it manually, just making it easier.
Hey, that just limits infighting.
Yeah. And you can white label it, make it look like it's your own platform. You have automated compliance. It says here, smart contracts perform the internal checks and enforce controls in real time. So you don't have to worry like, oh, am I compliant? And then transparency. You have an on-chain audit trail. This is all blockchain stuff. So you can literally see the whole life cycle of the asset that you're wanting to buy or whatever.
Moving on. So digitizing real world assets. Traditional financial markets are rife with inefficiencies and issues that pose substantial challenges. Capital markets in particular are plagued with convoluted processes from origination to settlement and maintenance. The reliance on disjointed infrastructure, unnecessary middlemen, and redundant manual processes only exacerbate these inefficiencies. And so a perfect example of that is the real estate transaction lifecycle, for example. I've always said that once title and escrow goes completely on chain, the real estate transaction becomes exponentially more efficient. It's not going to be its most efficient, still it's going to be far from it because real estate is so slow, but it's going to exponentially increase the efficiency of the transaction, which leads to shorter transaction times and shorter settlement times, because settlement times could be relatively lengthy in the real estate game. And then you have people. And usually when it comes to mistakes, just like traffic, it's usually because of a person, not because of a thing. It's usually because of a person in the thing or in control of that thing. And it's causing that traffic or that inefficiency. And so getting rid of the human element and automating that through tokenization, like I said, it just exponentially makes the real estate transaction, but pretty much any real RWA that exists in the world today, it increases the efficiency of transacting that asset.
Yep. And speaking of these efficiencies, so this second part here, it says financial institutions stand to save an estimated 30 to 70%. That's a lot as they continue to operate using outdated back office processes and infrastructure. Furthermore, intermediaries levy high charges for the issuance, trading, and management of assets, including clearing and settlement and corporate actions. This proves prohibitively expensive for small and medium-sized enterprises, hindering their ability to compete and thrive in the financial market landscape. So guys, really 30 to 70% is a lot. Like that can be the difference between being an SME and then, turning into a corporate giant. I'm reading this book right now, this Warren Buffett book, and it's called Warren Buffett and the Interpretation of Financial Statements. And in it was talking about how when he goes to buy a business, he looks for businesses with profit margins above percent. He was talking about like Coca-Cola and I forgot the other company that he was buying. That is a difference maker. Like if you can save 30 to 70% on fees, that increases your profit margin and it makes you look better in the eyes of people like Warren Buffett, or if you're trying to get acquired or just overall running your business better. 30 to 70% is a lot. That's a lot.
Yeah. So I used to say this way back in the day before tokenization became an actual thing in the world. Tokenization takes the most illiquid asset, aka real estate, and turns it into one of the most liquid assets overnight. That's literally what it does. So this little graphic here is comparing effectively the fees that you would expect to see when it comes to deploying an asset in TradFi versus Chintai / DeFi in general, but this specifically is Chintai. And so you can see initially on the issuance, there's going to be a 3 to 7% fee. And then you have to go through secondary clearing. And you can see all these fees here. I don't know, what would that even come to? A lot of money. Then you go to the exchange filings. It gets even more expensive. So it's like the further you get, the more expensive it gets. It gets more expensive. 20,000 for the app review, 25 for the listing fee, clearing and settlement membership fee, 10,000. Exchange filings, public disclosure system fee, another 10,000. Then you move on to custody. Just to open it is $30,000. To segregate it, you're gonna need $5,000, and then you're gonna need another $5 to transact. Oh my God! And then for management, it's $20, $4, whatever. Now, all that, I mean, what that's $80,000,
Nah,
$60,000.
it depends on how much they're doing, because some of these are percentage fees.
Yeah, that's true. So I mean, anywhere from 80,000 to it can be a few million. Yeah. So now compare that to Chintai. There's a 1%, 1 to 3.5% issuance fee on origination, and then you have a 1% trading fee, and there's instant settlement. And all the exchange filings, custody management, that's all free. And so I mean, the cost savings, I mean, it's literally unreal, actually.
It's like you said in that video in 2017, it's unfathomable.
It's unfathomable. If you're someone who constantly deploys assets in TradFi and you believe in the tokenization narrative, in the idea of tokenization, in the practical side of tokenization, and you're an investor in the Singaporean markets, I mean, it seems like leveraging the Chintai system for asset deployment seems like a no-brainer. But also the risk is that it's on the blockchain, and for some reason that's still a perceived risk in our eyes. It's kind of weird.
Yeah, no, I agree. So in the beginning, we talked about how they mainly focus on like institutions, but they also have something for SMEs. They have two different platforms within one that we're going to kind of go over here. So it talks about the savings tier. Benefits aren't just for large corporations. Smaller companies and mid-sized enterprises can leverage their friendly technology to raise capital efficiency, thereby democratizing opportunities within the financial market. So you go here, it has two platforms for all uses. So it says Chintai operates through two distinct platforms, Chintai based in Singapore, and then Chintai Nexus, and each catering to different types of digital assets. So Chintai is licensed to act as a capital market services provider and recognized market operator by the MAS. And this allows for primary issuance and secondary market trading in digital securities. These can range between equities, real estate, bonds, collective investment schemes, funds, commodities, and more. And Chintai mainly serves mid-sized asset managers to large institutions, and the investors are typically accredited or institutional investors. An accredited investor is someone who makes at least $200,000 for the past 2 years, $300K with their spouse, or they have over $1 million in their net worth, not including their primary residence.
So I also think it's important to mention that when it comes to Chintai Nexus, it says here, it caters to the primary issuance of non-security tokens, such as utility tokens, carbon credits, and certain alternative asset classes. So it's not the regulatory compliance side of Chintai. So going back to the beginning, the regulatory compliant is focused solely in Singapore at the moment, but this allows them to interact with other chains and be, a little more flexible with their approach and not be stuck in Singapore. And I think the move with the British Virgin Islands has a bit to do with Securitize. Maybe that's just a haven for like tokenization companies, because Securitize is there as well. And Securitize, guys, is the company that just solidified a partnership with BlackRock with their Biddle fund that they just launched a couple of months ago. And yeah, if you guys haven't, we shot a video on that. I don't know where it's going to pop up. You know what? You guys should be looking at the fat ass thumbnail right now. Go ahead and click that video. Click the link in the description if you haven't seen it. And so the Chintai Nexus side of Chintai is expected to attract more of the small and medium-sized enterprises versus, those large institutional guys that want to tokenize billions of dollars. And while the two platforms serve different audiences and specialize in different types of assets, they both run on a shared blockchain, utilizing the same resources, though they function as a separate legal and operational entities without direct access to each other. And so that just goes back to the point that, the regulatory compliance side is sticks in Singapore. And then this allows them more reach so that way they're not just like pigeonholed to Singaporean investors.
And yeah, to just piggyback on that, I think it's cool that they run a shared blockchain and use the same resources, because that It eliminates fragmentation. It makes it a lot easier. And it makes it so that if one thing happens that's good in the future for one, it benefits the other. Exactly. And usually they're spreading themselves. People always talk about, oh, you don't want to spread yourself too thin. They're spreading themselves thick. I think that's what
it's literally increases. Look at the structure behind this this graphic. Actually, that structure is a very strong structure. I mean, you could roll this structure down a hill. It won't break. It'll just roll. It'll just roll because it's been all the shock is being absorbed. And so by having a shared blockchain, if one side of it gains strength, then the other automatically by osmosis gets stronger as well. And so it's great for security. I'm going to change my headpiece because my head's getting all hot right now. Okay. All right. See, that was magic.
Another interesting thing that I thought, well, actually, it makes sense now.
You just going to ignore my fucking magic trick? It's like, no, all right, let's go.
I think it's interesting that they're using the EOS mainnet as a testing ground. But like you said, this is the Chinese version or Asian version.
Yeah. You see, that adds to the point. Yeah.
Yeah. Because like, why the fuck would you be using EOS? Let's be honest. But they probably want to support their peeps, which I get.
So we can quickly touch on LPing real quick. So whilst I never say whilst in real life, Jesus. Whilst it is important to manage our resources efficiently, the CHEX token can be used to incentivize behavior that should be encouraged in our ecosystem. The biggest hurdle to a tokenization and exchange platform is always liquidity. Facts. To that end, we want to encourage liquidity on our platform by having users stake their checks along with USD into our automated market making system for added rewards. It helps keep them afloat. So you can look at liquidity provisioning on a project like this, just kind of hammer home their point. It's kind of the lifeblood of the platform. It's pretty mandatory. So if you have an exchange, a legal exchange, it's mandatory for you to have a market maker legally. If you're starting an exchange, if you do it illegally, you don't have to. Then price discovery is all out of whack. But yeah, if you legally want to start an exchange anywhere in the world, you need a market maker, and that's effectively what this is. And this is the reason, because the biggest hurdle, as I said, is liquidity.
The best example I can give of liquidity, just think about tokenizing these assets is like you buying a boat, right? And when you buy a boat, you want to be able to put it in water where you can go around and enjoy the boat. Liquidity is like having enough water for everyone to fit their boats in this body of water. If there's no liquidity, you have all these people buying boats, but then when they go to put it in the water, everyone's boat's touching. Some people can't get their boats in. You want to have enough liquidity so that everyone can kind of move around and they're happy, so that they don't want to go take their boat and go and, you know, drive around, sail around somewhere else.
Liquidity is like water. If you don't have it, you die.
Okay, so now that we covered all of the fundamentals, let's go through the tokenomics, because the tokenomics isn't good. It doesn't matter if the project's good or not. It may not be good to buy it. I really like these tokenomics. So it says here, within the total token supply, a strategic allocation was made to support the ongoing development and expansion of the Chintai ecosystem. Specifically, 20% of the tokens were assigned to the dedicated team behind Chintai. And then an additional 20% were reserved to facilitate future partnerships, provide liquidity, and cover other strategic requirements that may arise in the future. From this, approximately 124 million checks is still in reserve. Now, in terms of current distribution, the founding team retains ownership of approximately 92 million checks, reflecting their ongoing commitment to the project. So it shows like all this stuff. And I think this might be outdated, because if you look here on CoinGecko, you can see that all of the tokens are unlocked. Like the market cap and the fully diluted valuation is the same. And that's why I believe this price has been on a bit of a tertiary.
Yeah, this past month has been going crazy.
Yeah.
And this is important because projects like Ondo and other RWAs, you know, they still have unlocked schedule. So to be fully unlocked already, I mean, that's a great tailwind for price.
Yeah, speaking of, so now that you guys made it to the end, are we buying this right now or not, and why? I think it's an obvious answer. I'm not buying it right now because look at this price. I want to let this thing cool off a bit. I think we can probably still come back down to around this area here. What goes up must come down, and this thing is just like a steep mountain, damn near. Like I wouldn't even climb that mountain.
Yeah, I bought at the peak, bro. No, it's like, no. Yeah, same pretty much. I'm not buying it right now, but it is something that I want to keep my eye on, because I do believe that there is a pullback to be expected here in the crypto markets. What goes up must come down, except for the S&P. Like, no, but
You ain't lying.
but yeah, no, man. It's something to keep my eye on, like big time. It's actually a great project, and I do hope they become regulatory compliant with the U.S. because for some reason, I just feel good about checks, man. You know, they say you keep your emotions out of it, but sometimes you just feel good on these on what certain projects, and this is one of them. So we'll definitely keep my eye on it.
So guys, before I wrap up, I do have to say this project was actually brought to us by one of our community members. Shout out to Chris. So guys, if you guys want to join a vibrant community, we're always spotting opportunities, you know, especially now that the bull market's heating up. We're going to be doing a lot more deep dives, not on just RWAs, but we're going to start doing more on AI. So if you want to be a part of a great community, we have a 13-hour yield farming course. I'm going to shoot a video on how to go about accumulating this passively. Click the link in the description, see if you book it. Click the link in the description, book a strategy session, and we love to hear from you.
Well, guys, we appreciate you as always. Don't forget to tell your aunties and stuff like that. And as usual, see you guys on the next one.
Like, comment, subscribe. We'll holler at y'all.